Hello everyone and welcome to my channel. My name is Ashley and today we have Miss Nicole Grogan Alston with us. She is a corporate tax strategist born and raised right here in Atlanta, Georgia. She is a mother of 4 and the owner of DNC Accounting Solutions, DNC Business Solutions, and DNC Academy of Entrepreneurship. And today we are going to be discussing how taxes relate to probate and estate planning. Now let's get into this. All right, Nicole, can you share with us maybe some of the most critical pointers, tax pointers that someone should keep in mind as it relates to their estate plan? When they're sitting down with their attorney, what are some things that they should keep in mind as it relates to their taxes and estate planning?
The first thing that they should keep in mind is the estate tax exemption. That is a big one because we want to make sure that we understand that the value of the estate is going to determine whether or not we're going to have to pay estate taxes. So we want to always make sure that when we're sitting down with those attorneys and we're getting ready to, plan out our estate as well as, maybe doing trust and things of that nature, that we understand that it is an exemption when it comes to the value of the estate. And right now in 2024, that value is 13 million. So anything that's up under 13 million, you're not going to be taxed on it. Okay. However, if the estate earn any type of income, such as dividends, interest, or if it's a rental property and it's receiving rental income, then that's when you come into play or potentially have to pay some type of estate tax. Okay. So that is one of the biggest things that we want to keep in mind. Another thing that we want to keep in mind and think about is the lifetime gift exemption. Now, we are able in our lifetime to give so much money to our beneficiaries while we're still here, while we're still alive, and they're not taxed on it, nor are we taxed on it. Right now in 2024, we're able to give each recipient up to $18,000 and they do not have to pay taxes on it. So that's another thing that we want to think about as well. Do we want to wait and have this big estate passed down to our loved one upon our death, or do we want to kind of decrease that estate by giving out gifts while we're still here?
Okay, so if someone wants to give a gift, what you're saying is that it's better to do it while you're living and break it down by the year versus keeping it in your estate to give to them after you pass.
Exactly. Okay. Especially if you know that your estate is going to be more than $13 million. Exactly. Okay. If you know that the estate is not, and when we're talking about this estate, we're looking at everything. We're looking at money. We're looking at property. We're looking at, collection of art, things of that nature. And sometimes people even look at, dishes that they purchase. So we want to make sure that when we're doing this planning that we have a good idea of what the value of our estate at that time. And if we are in a position to where, like I said, we have rental property or things of that nature, we also want to take in consideration that amount of money that we will be receiving for renting that property, because ultimately we want to make sure, again, the name of the game is to make sure that we're paying the least amount of taxes, whether we're here on earth or after we're gone. Because what typically happens, that burden goes down to our beneficiaries.
Okay.
And we don't want that.
Right, absolutely. Yeah. Well, thank you for sharing that with us.
Yes.
Subscribe to my channel to learn more about probate real estate, financial literacy, and generational wealth planning.